Thank you, Ms. Sanda Ojiambo, Chief Executive Officer and Executive Director of United Nations Global Compact, for the speech. And of course, a reminder for all of us to raise our SDG ambitions, her call to action to all of us here. Right, ladies and gentlemen, time to move into our first panel discussion of the day, or basically it's panel discussion number 4 for the whole event. It's on making sustainable financing the pathway to business sustainability. The panelists for this session are Mr. Elliott Harris, United Nations Chief Economist, Yang Berbahagia Datuk Abdul Rasheed Ghaffour, Deputy Governor of Bank Negara Malaysia, Dr. Pakorn Peetathawatchai, President of the Stock Exchange of Thailand. And the moderator for this session, well, she leads CDP's regional efforts in Hong Kong, Southeast Asia, Australia, and New Zealand. In her role as director, she engages with corporates, investors, and cities in their efforts to measure and manage environmental impact. In her previous career, she spent 17 years in finance, most recently in private equity with Aberdeen Standard Investments. And beside that, she was also part of the private equity environmental, social, and governance ESG working group, which involved formulation of the ESG policy and leading the policy implementation for Asia Pacific private equity investments. She remains an active member of the Hong Kong Venture Capital Association and represents CDP on the ESG disclosure and integration working group at the Hong Kong Green Finance Association. Ladies and gentlemen, the moderator for the panel discussion number 4 on making sustainable financing the pathway to business sustainability. Please welcome Ms. Pratima Divgi, Director of CDP Hong Kong. Over to you, Ms. Pratima Divgi.
Thank you, Rahim, and good morning to you. And to our audience, a very warm welcome and welcome to the session. My name is Pratima Divgi, and for those of you that are not familiar with CDP, we are a not-for-profit that works with corporates, financial institutions, and policy on environmental best practice. We are also a founding member of the Science Based Targets Initiative and Renewable Energy 100, or RE100 as it is briefly known. Jumping into this topic, I think it's well established that to meet our sustainable development goals, finance is a powerful lever. It's not the end, it's the means, but we need finance and we need lots of it. Mm-hmm. The UN Conference on Trade and Development, UNCTAD, states that anywhere between 3 and 5 trillion US is needed annually. And we have made some progress on sustainable finance. I mean, if you look at the numbers in 2020, there's been a fair amount of exponential growth. But even at today's levels, the gap in funding is estimated to be approximately 2.5 trillion. Closing this gap will require us to institutionalize our understanding on sustainable action. But in the ASEAN context, it also means finding the right balance of pragmatism and understanding, what are the specific needs in terms of environmental, social, but also economic development factors. And I use ASEAN very broadly here because, each country and jurisdiction within ASEAN has its own specific needs that differ fairly largely between the countries themselves. As Rahim mentioned, joining with me today on these issues is a panel of very distinguished speakers. We have with us Elliott Harris, who is the Assistant Secretary General of Economic Development and Chief Economist at the United Nations. Elliott, a special thank you for joining what are pretty late your hours. So thank you for being with us today. We have Abdul Rasheed, who is the Deputy Governor of Bank Negara Malaysia. And we have Dr. Pakorn Peetathawatchai, who is the president of the Stock Exchange of Thailand. Thank you for your time on being with us today. I think to kick off the discussions, perhaps what we could do is start with the current state of play. And here, Elliott, perhaps we'll start with a global perspective from you, and Rasheed and Dr. Pakorn can then add this on from an ASEAN context especially. Could you share with us some insights on the sustainable finance ecosystem, and what are some of the policies that are being actioned to promote sustainable finance?
Thank you very much, Pratima. With regard to the overall state of play on sustainable finance today, I think we have to all agree that although there has been a marked increase in the flow of sustainable finance, or the flow of finance into sustainable activities, it is not anywhere near enough. We just have not been able to generate an expansion of the flow of finance into sustainable activities, sustainable investments on the order of magnitude that's needed. And I think there are 3, maybe 4 issues at stake here. One, it has been difficult to identify a pipeline of bankable projects that are sustainable and that are at scale. The second one is that international capital markets, for the most part, are still rather short-term in their nature, in their orientation. We're talking now about investments that will transform the structures of our economies. They are longer-term in nature. There is a bit of a discrepancy there. A third problem, I think, is that the assessment of risk is still something for which there doesn't exist a generally universally accepted methodology. It's been difficult to figure out, well, what is a sustainable project, differences as well in definitions, and how to assess the risk of that project, and consequently that is one of the hindrances to the flow of finance. But the most important factor from my perspective is that it is still far too easy to make a very healthy profit doing unsustainable things. And so we have to overcome a certain amount of inertia as well. And in the private sector, with that short-term orientation, there needs to be a sort of a shift in mindset. We have to have policies by governments and by financial regulators that reduce the flow of finance into non-sustainable activities, and that could be through prudential regulation. It could be through the disclosure of the risks inherent in the non-sustainable activities. It could also be ensuring that those financial sector actors that are taking steps, and we see quite a few of them are showing great interest in ESG investing, for example, or in impact investing, that they do not move forward and sort of shift their action towards sustainable activity only to find that the unsustainable activities find financing in other parts of the financial system. So we have to have a more uniform approach to that, and that is, I think, a challenge for the regulators. And then I think the biggest problem, again, is that it's still not entirely clear what is sustainable, how one measures that sustainability, and how we agree on how we want to define that and measure it and disclose it. And I think when we make progress towards those aspects, the definitions, the standardization, and the metrics of it, we will find it easier to encourage the flow of finance towards more sustainable activities. I'll stop there.
Thank you, Elliott. Rasheed, would you like to add in your thoughts on this?
Sure. Thank you, Pratima. I think good day and good evening to all, and my fellow distinguished panelists as well. I think let me thank the organizer. It's been my pleasure to be on the panel today to discuss a topic that has gained a significant momentum, especially in recent period. Perhaps I can add to what Elliott has said from the perspective of ASEAN. I think I'll just touch in terms of the current state of play by providing a macro perspective on the policy considerations in ASEAN, including Malaysia, in terms of advancing the sustainability. To begin with, I think from ASEAN perspective, I think ASEAN is committed to sustainability goals and has always placed a strong emphasis on sustainable development, as demonstrated by our commitments to the Paris Agreement. And this is very clear. Factors such as geographical, demographic, and also dependence on natural resources. What that means is that ASEAN countries are susceptible to climate change effects. At the same time, ASEAN is also still building social resilience. Therefore, it has been estimated that if climate change continues unmitigated, ASEAN countries could possibly incur GDP per capita losses between 0.7 to 8.5% by the year 2100. And this is huge. And from Malaysia's perspective, just to add some additional point on this, is that as a signatories to the Paris Agreement, ASEAN countries have also made various commitments to contribute to managing climate change. Malaysia, for example, I think has recently enhanced further our unconditional target to reduce the intensity of greenhouse gas emissions by 45% based on GDP by 2030. And this, we hope, will contribute towards supporting Malaysia's aspiration to become carbon neutral by 2050 at the earliest. But just one point I'd like to also add here at this point of time is in terms of that ASEAN cannot be left alone to act on its own, because advancing sustainability, particularly for ASEAN and also other developing economies, will definitely require significant investments, access to technology, and also a know-how. And as ASEAN countries still rely on fossil fuel power generation to meet our energy and developmental needs, I think the transition to sustainable energy and climate resilient infrastructure will definitely involve huge investments and funding. You touched about this, Pratima, earlier. I think, for example, in Malaysia alone, it is estimated that we will require about 33.5 billion ringgit in terms of approximately about $8 billion in funding for renewable energy sector alone by 2025. I think maybe I'll stop there first. I'll come back to the other points later on.
Thank you, Rasheed. Dr. Pakorn.
Yes, I think our two panelists already mentioned the importance of the ESG and the sustainability finance. However, I would like to point out one of the very important things is that how can we measure the value of the sustainable finance if we don't have a good ESG data from the company that are doing business? That's why, in my opinion, one of the things that we would like to promote and we would like to support is that how can we get the quality ESG data from the listed company to the investor. In that way, we need to have the solve the problem like the limitation of the data, the unstructured data format, the lack of the standardized data, and the data provide a limited coverage of the company in some region. Those are the things that our stock exchange and our SEC has been working on the one report that would solve that kind of problem by providing the structure platform for the listed company to be able to disclose their ESG data regarding to the environment, the social, and the governance in a more formatted, machine readable, and very comparable way, so that each company can be used, the data of each company can be used by the investor. I think that would certainly support the growth in the valuation of the ESG, and the listed company who provide this kind of information would benefit from those disclosure.
Thank you, Dr. Pakorn. I'm hearing sort of the gaps that Elliott kind of pointed out, which is, bankable projects that can be scaled, the ease at which, you can get finance for unsustainable projects, and the sort of lack of standardization currently that exists, and hopefully solvable in the future, but currently the issues that keep coming up with respect to how do you choose one sustainability project to finance versus another, and which one do you actually prioritize. But at the same time, there's, Rasheed pointed out with respect to some of the ambitions and all of the actions that policymakers are trying to do in the markets, in their respective markets, with respect to, meeting these sustainable development goals. And I think that's probably quite key because, the commitment, since it was started out, hasn't wavered. We're still trying to figure out the how. But the commitment by itself still remains strong. And, coming to my next question, which is, we understand that, obviously sustainable finance is a lever. It's not, the end goal. It's the means to sustainable development. And so sustainable finance policy is going to require support and alignment with other policymakers within your respective jurisdictions. And so how are finance policymakers, working with other policymakers to drive this agenda within your respective jurisdictions. And Rasheed, perhaps we'll start off with you, with Dr. Pakorn adding in, and then Elliott, if you could add in some of the examples, or perhaps how you see other jurisdictions, ex-ASEAN, also working on these issues. That would be great to hear.
Okay, thank you, Pratima. I think this is definitely a very important question. In fact, very hot. I think I would say that a multifaceted partnership, including a public-private partnership, will be highly critical in this. Let me just share perhaps on Malaysia's approach in building such partnership. I think from the bank's experience, working collectively with other regulators and industry players has enabled us to learn together and also co-shape a more conducive ecosystem in driving sustainable finance. Our approach in this is perhaps I would say twofold. First, by establishing an open platform to facilitate regulatory conversations and also ideation. How we did this is through the value-based intimidation community of practitioners. We call it the YBhg Corp. This is an industry-led forum that focuses on active exchange of knowledge and experiences and coordination of actions to further accelerate sustainable agenda through value-based practices. One notable outcome from this collaboration that we have seen is the issuance of a series of YBhg financing and investment impact assessment framework, sectoral guides, which basically serve as a granular sectoral and activity impact-based risk management toolkit for financial institutions to manage ESG risks. And I believe the sectoral guides complement the climate change and principle-based taxonomy that was issued by the bank recently. Second is actually by adopting a co-creation approach and we do this through the Joint Committee on Climate Change, or we call it JC3, where both financial regulators, Bank Negara Malaysia, and also the Securities Commission, and also together with the industry players, we work closely to co-create sensible regulations and also other key responses. I think we have seen the impact of GC3 in practical terms from a platform just to share experiences and practices. GC3 has actually evolved into a platform that provides context and advocacy for both public and private sectors. For example, GC3 is now playing instrumental role in advocating climate change actions through active engagements with key stakeholders, including businesses and government as well, to better understand transitioning issues and opportunities along the supply chain. And we also work closely with the government in supporting and also aligning our work with the sustainability agenda and objective at the national level. For example, in the Malaysia Plan, the 12th Malaysia Plan, a 5-year plan for Malaysia, we have also provided some input there and ensuring that our work is also aligned with the national aspiration. I'll stop there, Pratima.
Thank you, Rasheed. Dr. Pakorn?
Yep. I think to be able to achieve the goal, no one can work alone. As a result, in the financial sector in Thailand, the SEC, our exchange, and the Banking Association and the Asset Management Association has come up with a working group on sustainable finance. And recently, we have launched the Sustainable Finance Initiative for Thailand to set the direction and framework to advance the sustainable finance agenda across the Thai financial sector. And those agenda include the development of the practical taxonomy, because taxonomy is one of the things that we must make everyone understand the same thing and to do the thing that they are looking to do. Improving the data environment, like I mentioned before. If we don't have the data, how can we value it? How can we incentivize it? That's going to be impossible. Then implement the effective incentive from the government and from the private sector, and creating demand-led product and services. For example, nowadays in Thailand, there are more than $2 billion of the mutual fund that investing in the sustainable sustainable business project, and more than $6 billion investing in the green bond initiative in Thailand, both on the private side and the public side. And lastly, very important also, we need to build up the human capital on either the listed company, investment company, or even the data vendor and analyst. So in my opinion, we need to create an ecosystem as a whole for the ESG and sustainable concept.
Thank you, Dr. Pakorn. Elliott, would you like to add?
I would, Pratima, because I do think that I agree entirely with what my two co-panelists have said. But the one thing that's missing here, in my view, is the entire enabling environment of policy. We adopted the Sustainable Development Goals 6 years ago, but by and large, there are very few countries that have taken all of their policies and made those policies consistent with sustainable development. Now, this is a problem because when we talk about mobilizing private finance for sustainable investment or for sustainable financing more broadly, that means we have to entertain the question of risk. Private finance operates by trying to manage the risk. And part of the problem here is that very often the perception of risk is large enough to dissuade the private investor from engaging, in particular in these new and sustainable projects for which there isn't really a long track record. Now, that risk that we have is sometimes exaggerated, but one thing that can help reduce the perception of risk is a predictable, consistent, reliable policy framework. Now, if people see on the one hand that governments have subscribed to the Paris Agreement, but on the other hand that they're still subsidizing fossil fuels, it is fundamentally inconsistent. And no self-respecting investor is going to trust that kind of policy, knowing full well that it's going to have to change in a few years anyway. So I think that is one of the most important things that has to change. It is government policy, especially budgets, have to be fully aligned with sustainability, with the Sustainable Development Goals. And there has to be a credible commitment to reliable, predictable policy to help to reduce the perception of risk economy-wide. Because we talk a lot about de-risking and about public-private partnerships and blended finance, but all of those things operate one project at a time. These are bespoke operations that are very difficult to replicate, very difficult to scale. The second thing is, of course, that word scale. In developing economies in particular, just the relatively smaller size of the economy means that projects are going to be smaller in scale. It is impossible, however, to mobilize $3 trillion of investment a year, $500,000 at a time. Who has the time to do it? So the money has to flow in much larger volumes, and that means we have to find ways to credibly consolidate smaller projects into larger investment vehicles, if you will. That requires an infrastructure, the ecosystem of sustainable finance that Dr. Pakorn was talking about. But that has to be something that governments and regulators cannot construct on their own. They have to do that in partnership with the private financial sector. There has to be a role for the asset managers and for guarantee institutions that provide, if you will, the kinds of guarantees that will make these kinds of investments take place. The third thing, I think, is, again, something that Dr. Pakorn talked about, is the right incentives. And these incentives come from policy. The policy has to be done in a way that doesn't insert externalities, that doesn't insert distortions into the pricing, so that the relative prices actually reflect not only relative scarcities, they have to also reflect the true costs of the activity. The externalities are what have caused our problems with climate and biodiversity loss in the first place. So we cannot afford to leave those externalities in place while we try to funnel more money into sustainable activities. We have to make visible the cost of investing in fossil fuels so that it makes economic sense to stop doing it. And then all that money that is going into things that we don't want will start looking for more sustainable applications. And that then is the change, the sea change that we need to have if we're going to be able to finance the SDGs. Thank you.
Thank you, Elliott. I remember reading a IMF article which specifically pointed this out, where, if you look at the sort of tax subsidies of fossil fuels, the amount looks small, but when you start adding in global warming, environmental cost, local pollution, the fossil fuel subsidies that we have today is roughly around 7% of GDP, which is not a small number, and needs to be well recognized, which can then shift the angle. But it's from Dr. Pakorn and Rasheed, I'm also seeing the kind of efforts that are being put in place right now, recognizing the fact that this ecosystem does need to come together. It's not something that can be worked in silo. In Hong Kong, for example, similar to what we're seeing in Malaysia, we have the cross-sector agency, which is which works with across policymakers on the subject matter of sustainability and climate change. And Dr. Pakorn, I wanted to go back to the point that you made earlier, and which is a recurring theme in this discussion, which is essentially ESG data. It's required. It's important to address SDGs. There are some steps being made. For example, globally, if you look at the IFRS, they have come out with starting with climate change, but then expanding that to overall sustainability indicators, seeing a way and a method to standardize this. But it goes without saying that without good quality data, the financial lever doesn't move. And Dr. Pakorn, you mentioned a little bit about the ESG efforts that the capital markets in Thailand is doing. Perhaps you could expand a little bit on that, and then we can look with Rasheed on what's happening in Malaysia, as well as what Elliott is also seeing in terms of best practice happening globally.
Certainly. The first part is that all this ESG data disclosure got to be aligned with the global standard. For example, like the GRI or SDG. Those are the things that first we have to aim for. And secondly, we need to have relevant and suitable information for each industry. That's why we come up with a template that is standardized and can be comparable for the company to disclose this kind of information. Let me give you an example on what type of information that we require them to provide. First, how the ESG integrate into the business value chain. That's the first mission statement. And then go to the sustainable policy and commitment. Then they will show us how they link this policy and the activity that they have. And then we will look into the environmental performance on energy, water, waste, the greenhouse gas emission management, and then look into the social performance like the labor practices, customer responsibility, community development. Those are the things that on the E and S side that we require them to disclose depending on the in the industry. And then lastly, the governance performance on the board, subcommittee, and subcommittee performance report, on the remuneration summary, on the risk management and internal control. So those are the things that we put in the thing we call the one report that will come out next year. And all the listed company in Thailand would have to disclose this kind of information. I would say it's a starting point so that the investor and the analyst can get this kind of qualitative information and use it to differentiate the ESG, the sustainable company, and the company that doesn't rely on this strategy yet.
Thank you, Dr. Pakorn. Rasheed?
Sure, thanks, Pratima. I totally agree with this point. I think data is very critical. It's hugely important for us to make an informed assessment and also decisions, be it for policymakers and also for businesses, including financial institutions itself. Therefore, addressing data gap is a key priority. Data remains scarce, or rather information is abundant, but not accessible, not affordable, or maybe not even meaningful, nor decision useful. Unlike traditional policy making, ESG policies would require a non-conventional, forward-looking and long horizon data, perhaps 20 to 30 years ahead. And this is difficult to get. This requires both private and public sector to work together to develop appropriate mechanisms to facilitate availability and also, more importantly, accessibility of data at a cost and time-efficient manner. Such science-based data include emissions, biodiversity loss, temperatures, and weather-related, which do not reside within the traditional stakeholders of financial regulators or even financial institutions. Even if it's available, such data is not in a ready-to-use and meaningful form for the financial institutions. They need to be translated into financial data for measurement of risk, such as credit and also market risk, which is the most important data point for financial institutions. In the case of Malaysia, what we have done is that, again, through the Joint Committee on Climate Change, the GC3 I mentioned earlier, I think a dedicated team has been formed to look into specifically into this issue of data. And aside of identifying critical data and their sources, the work also involves recommendation on mechanisms and solutions to address the gaps in data. I think what's important and a point to stress is that access to data has to be efficient and also affordable. I'll stop there, Pratima. Thank you.
Thank you, Rasheed. Elliott?
I'm going to draw, thank you, Pratima. I'm going to draw the distinction between the information and the data that are needed for managing a private company, an enterprise under ESG considerations, and the data that a policymaker or a financial regulator would need. If you take the policymaker is concerned, let's say, with progress towards sustainability. I'm going to leave it very broadly like that. The financial regulator is concerned with risks to financial stability. Now, we have these two, but the financial regulator finds him or herself increasingly drawn into considerations about sustainability as well, because we have seen, and it has been proven, that unsustainable activities and climate change and biodiversity loss are material to the risk profile of an enterprise. And so consequently, they're material to the bottom line of a financial institution. So what the financial regulator is going to need are data that will allow to inform an assessment of these kinds of risks to financial stability, be they from the unsustainability, climate change, that side, or be they from the practices of the financial entities themselves. And on the policymaker side, there's a need for information about how well we're progressing towards sustainability. Now, when you compare that with the data, and Dr. Pakorn gave an extremely good overview of the kind of data that are being put together for ESG management purposes, I think a lot of those data are very important for an investor to be able to make a judgment about the quality of the enterprise that they're thinking about investing in. But not all of those data are necessary for the financial regulator or for the policymaker to do their jobs. And so I think one of the things that we have to think about is, well, what is the baseline of information that should be disclosed so that the financial regulator and the economic policymaker can do their jobs properly, bearing in mind that there's going to be an awful lot more information that needs to be collected, needs to be analyzed in order to do a good job of managing an enterprise from the ESG perspective. And I think when we see that, then I think we can see how the public policy side needs to sit together with the private entity, the private financial and private corporate side, to figure out, well, how can we reach agreement on those metrics that need to be disclosed, right? Because that disclosure is the source data that the regulator and the policymaker are going to use down the line. It's also going to be augmented, and that'll be the source data that the investor uses to make a choice between investing in enterprise A or in enterprise B. But the set of information is likely to be much more refined, much more granular for the investor decision than it is for the financial regulator or the policymaker decision. In my view, I think if we agree on that distinction, then we can find ourselves in a conversation among the partners as to what the core elements that are common to both types of function would be. And I think that is an important conversation that needs to happen. Thank you.
Thank you, Elliott. I think if I understand that correctly, I think what you're saying is, the goals that are aligned for a specific jurisdiction with respect to their sustainable development goals, there needs to be a progressive monitoring and evaluation towards those goals from a financial perspective, as well as from a national perspective. And on the other side, you need the investors and the ESG data that Dr. Pakorn highlighted, which are standardized, but that's more from a financial risk-adjusted returns basis, which is required for financial institutions to make decisions based on the risk and the value drivers that will come from a policy goal towards sustainable development. Yeah. And so there needs to be this context between reporting, but also the monitoring and evaluation towards progress for sustainable development. I think that distinction is especially key and very relevant. And just going back to Rasheed, you brought out the point on ESG, And you did mention the 3 points that I specifically took away, especially for financial institutions, from a financial institution perspective, is the current data that's there. It could either be scarce, it could be unaffordable, and it may not actually lead to effective or informed decision making. So it may not even be as meaningful at this current juncture. So that standardization, which Dr. Pakorn talked about in terms of having one template where everyone responds to a specific level of response is necessary to the extent that we can, because sustainable development also in itself may not, to the extent that we'd like, may not actually be as standardizable as we would want it. I do have one question from the audience here, so I do want to put that towards Dr. Pakorn, and Rasheed can jump in as well. One of the questions that's asked, and this specifically leads to the financial industry, which is, should corporate sustainable finance instruments have more competitive rates if ESG impacts are proven? And I think this goes back to this slightly the other side of the mirror of what Elliott had spoken about earlier, which was can we show the actual cost of unsustainable projects? So Dr. Pakorn, any insights on this?
I would say that at the beginning, the green bond or the sukuk or any instrument that has this ESG as a brand or a product doesn't have much change in the pricing yet. However, one thing that we noticed that are different from the normal bond is that the demand for those bonds or those security are much higher. I think that is one of the very important thing. Instead of having the different pricing at the beginning, because people are not that familiar in valuation of this bond or of this instrument yet. However, the impact of the objective of this bond is so interesting, such that the investor pay a lot of attention to this kind of like green bond or the ESG bond or the sustainability bond. For example, when you look at the book building for this bond in Thailand, you will notice that there are many times more than just a normal bond from the same company. If this bond has been described as a ESG or sustainability bond, and with the story that show what type of project that the fundraising from this instrument will lead to. Also, in the future, I truly believe that once we have enough information, once we have enough ESG data on all these things, the pricing of this bond will be different from the pricing of the normal bond. But please remember, the demand for this bond nowadays is so high, and that would drive to the pricing in the future.
Yeah.
Thank you, Dr. Pakorn. Rasheed?
Yeah, thank you so much. And if I can just add to what, or reaffirm what Dr. Pakorn has just said, I think this is an evolution. I think this is a new market, and there is no clear differentiation. And I think this goes back to what my earlier point earlier on in terms of data. I think as more data is made available and investors can better differentiate the impact, then that's where we might be able to see the rate can be differentiated. At this point of time, I think it's still new to the market. Thanks. Yeah,
absolutely. I especially liked Dr. Pakorn's, the focus on the demand for the projects which link to green and sustainable finance, and the fact that despite the competitiveness of these rates might be nominal or negligible, the demand for the kind of subscription that you get for these projects speaks for itself on the fact that financial institutions are as well as investors are looking for these kind of projects. A second question that's come from the audience, and Elliott, I may direct this to you. It says banks may be reluctant to incentive sustainable finance instruments for borrowers without government support, but government coffers may be stretched with spending on post-COVID recovery, especially in developing economies. How can policymakers break this vicious inertia cycle, as this person posing the question puts it, and of who should bear the cost first, so that a snowball effect can take place for sustainable financing subscription to be mainstream option by borrowers?
That's an interesting question, Pratima. But I think that the core of the answer lies in what Dr. Pakorn said a moment ago, which is that the demand for these sustainable financial instruments is rising exponentially. The participants in the market are very interested in sustainable finance, and they're looking for ways in which they can participate in this market. Now, that says to me that having a government put its public money into de-risking an instrument, which I think is at the heart of the question, may not necessarily be needed. If the financing instrument is well designed, and if the perception of risk on the market or in that particular sector or in the investment for which that financial industry is designed, if that risk is seen as well, sort of well defined, and that the financial instrument allows the investor to manage that risk, then I think that perhaps that new instrument can create its own market without necessarily having the government subsidize it, without having the government bring in public money to de-risk the particular project. Now, there is a sort of a knee-jerk reaction that because we're talking about risky investment, somebody has to take away the risk. I think one can reduce the risk in many respects through information. The ex ante perception of the risk, you provide as much information as you can. But let's not forget that one of the reasons why investors earn a return is because they are intermediating managing risk. And that is part of the reason, the justification for the return. And so I think the challenge is to design a product that responds to the need of the investor, of the participants in the market, the ones who want to make the investment, the ones who want to provide the finance for it. I think there's a need to clarify how we can provide as much information as possible on the individual project to be financed, but on the overall market conditions as well. And I think we have to have a clear dialogue with those who want to participate in the markets, that there should not be an expectation that governments are going to come in and absorb all the risk and leave all the profit to the investor. That makes no sense, and that too is not sustainable, and particularly not sustainable in financially constrained countries where fiscal space is at a premium. So I think that there's a lot that can be done, but we have to think about it in a more constructive way. Thank you.
Thank you, Elliott. I think that also brings me to, I recall a central bank had actually done a fairly innovative step forward in sort of understanding and sort of educating the investors in their jurisdiction on risk. And what they did, they of course started with climate, but what they did was, they took the 5 banking risks that exist today, that everyone is familiar with. It could be market risk, it could be liquidity risk, credit risk, what have you. And they linked every aspect of climate change within those existing risks. So it becomes much easier for a financial institution that's, if they have read the paper, on how they can, how they should be looking at this within the existing risk structure. So, you're not trying to define and make a financial institution or an investor or a corporate, relearn, but actually identify this within existing risks within financial decision making. And it comes to my next question, which is really, I think it's crucial to have that and promote that kind of enabling environment for sustainable finance and investments. And I think it'd be great to hear from Rasheed and Dr. Pakorn and Elliott on, how can regulators and policymakers enhance the supply and demand of sustainable finance within their jurisdictions? Rasheed.
Okay, sure. I think in terms of, I think definitely what is important is really in terms of to create the environment and the ecosystem. I think that's very critical. And in terms of enhancing the supply of sustainable finance, I think that's definitely a priority area. And I think it's important to scale up instruments of finance itself. I think given the nature of ESG challenges, I think we need to critically broaden the range of blended mechanisms, for example, alternative finance markets, and also impact and value-based investments, and even for developmental financial institutions that can better match the risk and cash flows of sustainability related activities and projects. What we have done in Malaysia is that I think we have started with the approach of a regulatory sandbox, and this can be an effective mechanism to allow financial institutions to pilot, test, and also learn new solutions in a controlled environment. I think we have taken this approach in Malaysia. And additionally, the use of new and behavioral assessment tools such as psychometric assessment and digital footprint is also particularly relevant, especially for thin file customers who lack credit record. And initiatives such as agent banking, digital microfinance, and social finance have also been essential in our financial inclusion agenda through the greater use of technology, digitalization, and also e-payment. What's important is that we believe that regulatory barriers must be removed to also encourage such innovation to flourish. I think I also like to touch upon you mentioned just now in terms of the education and capacity building. That's critical as well. I think this transcends beyond the financial sectors and also requires, again, close collaboration between the government, and other agencies as well. I'll stop there, Pratima.
Thank you, Rasheed. Dr. Pakorn?
On our side, we are trying to support to have the product in the market that has a sustainability concept. For example, we come up with the indices called Thailand Sustainability Index to come up with the group of the company that has been performing well on the sustainability concept. Actually, it started from like almost 20 years ago during the Tom Yam Goong crisis in Thailand, that we are promoting the corporate governance, and then we are trying to promote the ESG, and nowadays we move to the sustainability, and we have this kind of like the star for the CG, the 5-star for the good, very good corporate governance company, 4-star for the good, and the 3-star for the medium, and then we develop that to the Thailand Sustainability Index that invite the company who has been practicing this kind of like sustainability business policy to be screened by the exchange that use a third-party index agency to come in and look at the qualities of this company. And we come up with more than almost 200 companies in our exchange that has been doing very well in this concept. After that, after we have the indices, we try to promote and we support our institutional investor to construct the mutual fund or the exchange traded fund that has this company as a component in those investment instruments. These are the things that we are trying to promote. Once we have the data, once we have the company who are doing this kind of like business policy, we are trying to promote to have a product so that investor can investing into it. And very interesting, when you look at the performance or the return, the total return on this portfolio, it has been outperforming the average indices in our exchange. So I think the way that you can have an option or the choices for the investor to start to investing in, I think that is the best market force that will push the company and the government policy to support this type of activities.
Thank you, Dr. Pakorn. I think sort of, looking at what Rasheed just mentioned, which is, working towards piloting in controlled environments on, new financial instruments and judging, how can you work on the objectives, outcomes of these from a sustainability perspective, but also from a financial return perspective. Right. And then, Dr. Pakorn, you mentioned, the recognition of companies, and I kind of term that as a name and fame, so that it actually it showcases the premium that will come from a better run companies from an environmental and social perspective. Exactly. Elliott, I just wanted to see whether, sorry?
It's like a risk management policy and practice. Yeah.
Absolutely. Elliott, I wanted to know whether you had any thoughts on the supply side and what policymakers could consider in terms of increasing the supply side of sustainable finance.
I think the first and most important step to increase the supply of sustainable finance is to decrease the supply of unsustainable finance. It sounds very, very pattern and simple, but we need to remove anything that might encourage finance to flow into unsustainable activities. And that could be, for example, removing any sort of perverse subsidy or raising taxes so that the prices actually reflect the true cost or the true benefit that could come from a given activity. I think to the extent that we make it less profitable to continue to support unsustainable activities, we create a demand among those who have finance to invest for things that they can invest in. The second step, I think, is disclosure. I think it's really important, as Dr. Pakorn said, if you provide the information, then you can inform the decision. And by providing that information and making sure that that information is brought forward in a comparable and well understood way, you can facilitate the flow of finance into the things that are considered to be sustainable. And that would mean making an effort to contribute to sort of a convergence around given standards, a harmonized view on, well, what is actually going to be green? How green must it be for it to be considered to be sustainable? And to have an agreement on that would make the metrics comparable, and that would make the reporting easier. It will still be difficult in the initial phase, but it makes it easier over time. And once you have the reporting in place, the disclosure can follow. And I think that's really important. And then the third thing is to take advantage of whatever possibilities exist to treat sustainable financial flows more favorably. Now, this may sound a little bit like picking winners, but in many respects, we have been doing that all throughout recorded history. We provide support for anything that we consider to be socially valuable. You know? And then we continue to provide support even when we have changed what we consider to be socially valuable. I think that there's no reason why the regulatory and prudential apparatus cannot treat a sustainable investment more favorably, require, for example, less provisioning of a sustainable credit as compared to an unsustainable credit. Yeah? Make it more difficult for a bank or a financial institution to hold assets on its portfolio, on its books, that are clearly unsustainable. Make it costly for them to do so. And I think that kind of differential treatment can go a long way to shifting the flow of resources into sustainable activity and augmenting overall the willingness of the financial sector to engage in sustainable activities. Thank you.
Thank you, Elliott. I think that's, I think you nailed it when you said, socially valuable investments at the end of the day, and how do we price socially valuable investments? Rasheed, you had something to add from an emerging market perspective, so I'll just pass on the floor to you.
Thank you, Pratima. I think I totally agree in terms of what Elliott has said. I think as we move forward, we need to have that as the ideal state. But perhaps maybe if I'd like to emphasize that given the developing nature, it is also important for ASEAN to ensure the transition is an orderly and just manner. I think one that avoids premature economic exclusion and societal displacement, especially the vulnerable segments. So this goes back to the earlier point you mentioned earlier, Pratima, in terms of really it's a fine balancing act. I think unlike in the advanced economies, transitioning to a sustainable economy for ASEAN and many other emerging markets involves really a delicate balancing act. It also presents a complex set of course, governance and practical challenges for policymakers in this regard. This is where we have to balance in terms of economic development and social implications against sustainability priorities to prevent premature exclusion or sunsetting of a specific economic segment and displacement of society, especially those in the vulnerable segment. What I thought is that I think, of course, there's no one size fits all. And then perhaps as we may want to avoid imposing one size fits all approaches and framework on ASEAN and many other emerging markets, because this could result in destabilizing consequences with equally damaging effects as well, I think if not worse globally, and also that might affect in terms of our sustainability journey itself. I'll stop there, Pratima. Thank you.
Thank you, Rasheed. I think, we've got 5 minutes, well, 4 minutes with us right now. I do want to bring that, conversation back to the private sector, because, this is an area where the regulators and policymakers need to work with the private sector in driving sustainability. Just as an example, when we come to renewable energy, 50% is used by the business sector and the corporate sector. So, when it comes to electricity use, for example, they become an important part of the renewable energy journey. I wanted to just understand, how you're actually working with the private sector itself, from a listed company perspective or from a monetary regulatory perspective. What are some of the areas that you're trying to drive sustainable behavior? Dr. Pakorn, we'll start with you.
Yeah, I think what we have been doing is that we start at the top. We are trying to get the management of the company and the board of directors to get into this understanding of why sustainability is so important. And then we come up with the way that they can do all this activity and show what they have been doing to the public, to the investor, and to the analysts. I think that those are very important. And thirdly, the capacity building for the people within the organization and outside of the organization. How can you make people understand that business activity can be related and should be related to the sustainability concept? Because this is the risk management practice that I just mentioned to you, that to have a good sustainability activity is a good risk management. So those are the things that we are trying to promote. First, get into the board and the top management, get into the strategy and to the business activity, and train the people there to understand that these two are not just bottom down, but also not top down, but also bottom up. So those are the way that we are trying to do.
Thank you, Dr. Pakorn.
Side.
Thank you. Rasheed?
Thank you. I think just to reaffirm what I've said earlier as well, I think we definitely believe in this strong partnership approach. I think, again, from our experience, I think we work collectively with not just the regulators, but more importantly, the industry as well. And I think that's where I think we have learned together. And this is important in terms of co-shaping a more conducive ecosystem in driving sustainable finance. And certainly, I think the financial industry have a nurturing role to play as well in terms of, especially with the non-financial corporates, with regard to moving towards sustainable finance. Thank you. I'll stop there, Pratima.
Thank you, Rasheed. Elliott?
I think, Pratima, I would suggest that the private sector, the private financial sector, is actually a little bit in advance of the policymakers in government at this stage. And so there is benefit to both sides for coming together to discuss, well, what does the private sector need from government policy in order to be able to commit more fully to providing sustainable finance? And what does the government need to ask the private sector, the private financial sector in particular, to do? Part of the issue is establishing somehow the link between the ESG considerations that are on the private side and the SDG, the Sustainable Development Goals considerations that are on the public side. The link is there, it's material, but it's not easily or well defined. And if that debate, that discussion, that dialogue between the private sector, corporate and financial, and the government can facilitate the understanding of how ESG progress translates into sustainable development progress, I think then we'll find that the dialogue will contribute to broadening the attractiveness of sustainable finance for the private financial sector and for private corporates, and also make the government understand what it has to do to enable this private finance to actually flow. Thank you.
Thank you, Elliott. I just to summarize the discussion, in fact, what I hear is already the efforts that are being made, by capital markets, by monetary authorities, by policymakers globally, but even within ASEAN, tremendous amount of effort in trying to engage with policy, with the private sector, trying to engage with corporate sectors in driving this understanding. And Elliott, as you pointed out, taking a slight step back and saying, how how do these corporate indicators or financial indicators of ESG align with the monitoring and evaluation of our progress towards sustainable development goals is a linkage that needs to be better communicated. Thank you so much for joining us today. We are right on time, I think slightly a minute late, but very insightful dialogue for me to take away a lot from. Thank you again.
Thank you very much.
Thank you.
And to my co-panelists again, thank you for the very insightful discussion. It's been a pleasure.
As well. Thank you.
Thank you.
Pleasure.